call the meeting to order. Bev, would you mind voicing our invocation, please?
Sure. Father in heaven, I thank you for the day and all the blessings you've given us. I ask God that you would be with us as we go through this audit. God, make things as clear as possible. Help us to make good decisions in the meeting next month. We ask God that you would just be with those who are traveling home, be with Liz and Janice and those who are having distance to go. I ask that you would be with them. Father, I thank you for this opportunity and this privilege. These things we ask in Jesus' name. Amen.
You stand and join me in the pledge, please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please.
Laugh.
Here.
Barker.
Here.
Rowe.
Here.
Miller.
Here.
Inman.
Here. Okay, I don't think there's any may signed up for a comment, I don't believe. So 2020-2021 audit presentation overview of the 2020-2021 audit. We'll turn it over to you and enlighten us.
Thank you. My name is Chris Hine with HBC CPAs, and thank you for having me out tonight and engaging us to perform the audit. So what I am going to start with is on page 75. Normally I just start at the beginning and kind of walk through the financial statements. However, I believe the findings that we will discuss will kind of set some context on what we will discuss later. What I will do is go through everything, and then I'm sure you'll have questions, so we can take those at the end if I haven't answered those. So, page 75. Before I get started, I just want to clarify something. The differences, and I know the council's been informed of this, I just want to reiterate for anybody who might be watching or gets the minutes, that a financial statement audit, which we were engaged to do, is a lot different from an investigative audit. So we were engaged to express an opinion on these financial statements, the numbers that are in these 70 pages, and are they in accordance with generally accepted accounting principles. So an investigative audit is looking at specific allegations, a specific period of time, and they're drilling down into specific areas. We were engaged to perform an audit of the financial statements and whether they were in accordance with generally accepted accounting principles. So I just want to make that clarification before we get started, and we're going to talk about page 75 here. Now, this is what we call a byproduct of what we do. We were engaged to form an opinion on the financial statements. However, as we're performing audit procedures to support the numbers in the financial statements, things will come up as we're performing our audit procedures. And if there are any internal control deficiencies, compliance issues, then we report them. We're not actively looking for findings or compliance issues or anything like that. We're performing our procedures to support the numbers in these financial statements. So you say you have $50,000 in cash, we will perform procedures of that $50,000 in cash. You say you have $2 million in revenue, we will perform procedures to get comfortable with those numbers. Okay? So looking at this report, as we were performing our audit procedures to become comfortable with the numbers, we found some deficiencies in the internal controls. Now, a deficiency in internal control is a design or operation of a control that does not allow management or its employees in the normal course of business to perform their assigned functions to prevent, detect, or correct misstatements on a timely basis. So that is a deficiency. So a deficiency doesn't have to be reported. However, if it's significant enough, it can be a material weakness or a significant deficiency, and then that's when we report them. So within this report, we had, I'm looking at the third paragraph down, and where it starts with a deficiency. We had 3 material weaknesses. A material weakness is that there is a reasonable possibility that a material misstatement of the entity's financial statements will not prevent, detect, or correct on a timely basis. And we had 2 significant deficiencies. A significant deficiency is a deficiency or a combination of deficiencies in your internal controls that is less severe than a material weakness, that also needs to be reported, a reportable instance. Lastly, on the last paragraph, compliance and other matters. We had 3 items of non-compliance. And again, we're not seeking these out, they're just part of our audit procedures. So what I'm going to do is go through each of these, starting on page 77. I'm going to talk about them briefly and really just talk about the heading that says condition, and then move on to the next. On these, if you would like, you can stop me and we can, discuss these. The first one, purchase orders and approvals. This is a repeat finding from our 2020 audit. The condition, our inquiries and testing revealed the following deficiencies. Purchase order review. Only one person has the responsible for reviewing purchase orders to review allowable expenditures. There's no documentation to indicate that other city staff members have reviewed the invoices to verify the accuracy, budget compliance, and matching of purchase orders and invoices. As a result, there's lack of independent verification and oversight in the expenditures approval process. So we had a discussion of this last year. All we can see is after the fact, and if someone actually, if there's documentation, they say they might have approved something, but if there's not a signature, we can't really take someone's word for it. We have to see the signature and the process worked out on paper, right? So again, this is a repeat finding on the purchase order. Department budget. Department heads have not been provided with updated budgets to track their expenditures against their annual budget allocation. This hinders the effective budget management and oversight. Again, a repeat finding from the 2020 year. City council adopts the budget, and department heads need to monitor the budget. They were not being provided with, timely budget allocations. So that's a repeat.
Excuse me, did you do the previous audit for us?
We did the 2020 audit, and
Okay.
but we did not do the 2019 audit.
Okay.
Yeah.
But you said the previous, when was that presented? Now, the reason
I mean,
You
I
know-
actually have it here, I'm sorry. Let me see. We issued that in June 9th, 2021. So at that time, these first 3 that we're going to go over, we presented them to council and management. They said they had corrected the issues at that time. And we'll get into this discussion later, I'm sure, but I don't think those findings were corrected at that time, June 9th, 2021. But so we performed a prior year audit, and that's when we issued. The next bullet point, purchase card process. Department heads have been granted the authority to make purchases under $501 without requiring a purchase order or additional approval. The purchase card balances are automatically deducted. The city staff manually enters the expenditures into the accounting system. However, there is no documentation to demonstrate that a city staff are actively reviewing or reconciling the purchase card expenditures. So, repeat finding on this. However, we'll talk a little more about purchase cards in another finding. It gets a little more messy than just that finding there. So, but we will discuss that further in just a second. But there's no questions on that repeat finding, I will move to the second finding.
One thing that I'd like to, and I think just would be, I'm not saying anybody's fault,
Right.
but we're way behind.
Right.
And I'm blaming whoever, I'm not trying to blame you guys,
Right.
but that's one of our problems. We're so far behind when we're finding stuff out. And even if we get it corrected, it's, we need to get up, and I say we, whoever's responsible and all this, we need to get up, that's what we want to do, get up to date so we can get things going in the right direction. Because some of this stuff was, I don't think we even got this information when we were halfway through, or I know we're well into the year, I think, when we got the previous audit you're talking about. Well, a lot of this stuff we probably should have corrected. I'm not arguing that point.
Right.
And somebody may have told you that it was corrected, but obviously it wasn't.
Right.
So that's what I'm wanting us to get up to date so we can do a better job that way.
Yeah, for sure.
And I'm not looking for blame, I'm just saying kind of general, we need to do that.
And I think another finding here in a second will kind of illustrate the reasons for how late we are, and we can talk about that here in a second. Controls over utility billings. This is a repeat finding from 2020. Condition, and I think we all have heard about this one, the rate update failure, inadequate collections pursuit, and neglected zero readings. Essentially, the city of Lindsay passed a utility increase in 2018 that was not updated into the system. As we were performing testing to get comfortable with utility balances, or utility revenue, we noticed that the billing amounts were incorrect. This was brought to the attention well before we issued our audit report. That was then corrected and updated in the utility billing system. This one should go away in your next audit because those rates have been updated. Inadequate collections, we just weren't pursuing outstanding balances, and neglected zero readings. If there was an active account that was showing a zero reading, there was no investigation. So repeat finding from 2020 with hopes that, as I'm told, were updated and changed for 22. Number 3, this is called, it's essentially a self-reported finding. So compliance with Oklahoma Municipal Budget Act. Condition, during 2020-2021 budget year, the expenditures of the general fund and library fund exceeded the appropriations, resulting in a deficit fund balance. So this is just reported on the financial statements. We're not allowed to have a deficit fund balance within the funds, and we had one, so this is a finding and repeated from the 2020 year. I will go on to the 4th finding on page 80. And here's where, it starts to get a little messy from the 2020 year. This one is on timely reconciliations. The city's bank accounts were not being reconciled for nearly a year, and P-card statements were not reconciled in over 6 months. So that is a lot. Some of these other findings would have been identified if timely reconciliations were being done, which we'll talk about here in a second. The double up on some of the accounting and things of that nature would have been caught within reconciliations. If reconciliations were done, we also would have seen and be able to present accurate records to departments and the council here. So from there, I will go, unless there's any questions on that one, I'll go to the 5th one. which this is just an overarching finding, limited understanding of county policies, and I won't go into each one, but I will hit the headings. Incorrect postings to the general ledger. Essentially, we were making entries and postings to backwards for various accounts. If it was a expense account, we would make the opposite entry, so then it makes it look like you have more funds than you actually do, because we're reversing essentially. You know, you get $100 that's an expense, and you record it as income essentially. I mean, you're posting it to an expense, but you're essentially recording it as income. It is going to obviously create havoc on the accounting. Untimely postings of transactions, the P-card activity with not being reconciled had not been entered. It was being manually entered, which goes back to our first finding. This was being hand entered into the accounting. It was not entered for 7 months. Lack of experience. This is just, there was some delays in getting reports ran for the consultants, and that was part of the delay in financial reporting. So if you read the bullet points there, you can kind of see the significant time it would take to unwind this. So we're sitting here in mid-2023 talking about a 2021 financial statement, and the reasons are primarily because of this finding here. Just a significant amount of work on the consultant's part. And this is a firm that does work all over the nation, is very experienced in government accounting, and so they know what they're doing. However, it just took them a long time to unwind some of this.
So we just didn't, I understand what you're saying, that kind of answers my question a little bit, but we really didn't have the information, whose ever fault it was. That's not what I'm looking for.
Right.
Some of these things have been carried on, even though there wasn't knowledge that they were been done wrong prior to. Somebody might have known it, but I'm just saying, it made it tough to do because we didn't, and whose ever fault it was. That's not, I'm just saying that's a problem we've got, getting the up-to-date audits and stuff.
For sure. And there seemed to be a gradual, in 19, there was a different audit, but, you know, then we had findings, and then we get to this year. So, you know, however, whether it's lack of knowledge, lack of staffing, I'm not gonna.
Sure.
Also, but it seemed to escalate. And that's, you know, the reason for the delay. I'll move to number 6. Condition, the city made incorrect payments to tax authorities for quarterly tax obligations, and some payments were allocated to the wrong quarter to the tax authorities. So this is a compliance issue. This, you know, compliance with the federal government, state government to make your tax payments. They were posted to the wrong accounts and sometimes incorrect. So just a compliance issue because you're required to make those tax payments.
So quarterly, we just missed some, or we paid them all incorrectly?
Incorrectly.
Incorrect.
And then you go on and you post it to, I'm paying the second quarter of 2022. However, it could have been posted, it was posted for the second quarter of 2021. Well, then you have to go and reconcile with the IRS or the state to say, no, this one was for this one was for this,
Okay.
and this is what we owe.
Okay.
That has since been corrected. It just also took some time to correct those payments and communicate with the governmental entities. So from there, I will go to the 7th. Missing vendor invoices, and the condition is the city was unable to locate for documents for expenditures that were requested for the audit. So again, I think Janice started July 22, so she was not, July 22. So, she wasn't a part of this audit year, and I feel for her because we were missing a lot, and then she would, I think there was a lot of misfilings and things of that nature. And so she was able to, get most of the documents we would request. However, we're still missing some, so it became a finding on the number 7. About 15% of the expenses did not have an invoice, 25% no purchase order. We could become comfortable, it hits the bank statement, hits the general ledger, there's a memo on what the expenditure's for. We just don't have a supporting document for it. So then that would become a reportable finding. Now, back to the first one, the majority of our expenditures were not in proper sequence as far as the initiation of the purchase order first, and then signing off on the invoice and the proper sequence of those transactions. I would say the majority of those. There needs to be an initial purchase order because we're comparing it with the adopted budget. Department heads are informed of that budget, and you guys know the situation, but that's not what we were seeing in the documentation that we received. So from there, I'll go to the 8th finding, which again is a self-reported finding. And really no surprise here because several departments were exceeding of their appropriations. Well, they were getting records, right? So until the end of the year, when all these things are compiled, they exceeded their appropriations for their department. And that's reported in the financial statement notes and is self-reported. So from there, if we want to talk about any of the findings before I move on to some of the numbers, we can do that, but if not, I'm going to go to page 24 and bounce backwards. So 24, this is the proprietary fund statement of net position. Now again, to your point, Tom, we are sitting here, 2 years past. So I'm not going to go too much into this information, just kind of give you a snapshot of where you were on June 30, 2021. Lindsay Public Works Authority, this is your balance sheet of your assets, liabilities, and net position. I'm just going to point out the unrestricted net position at the very bottom. This is an indication of the amount of unexpended and available resources that the city has at any time to fund emergencies. We are sitting at $1.5 million. That is not unlike an emergency fund for personal finance or a city. We're looking at that compared to your expenditures or revenues. We are sitting at 34% unrestricted compared to revenues, which is really not that bad for the Lindsay Public Works Authority. We're looking between 30 to 50% as a healthy unrestricted net position. But again, we're at June 30, 2021. So at that point, for Lindsay Public Works Authority, healthy net position. Now, I'm going to back up to page 19. And look at the general fund and the same statement here. And this is your assets and liabilities for the general fund at June 30, 2021. We have a unassigned deficit of $140,000. So this is, again, essentially the leftover that you're able to use for future budgets, emergencies, things of that nature. We are at, for June 30, 2021, at a negative $140,000. Now again, 2 years passed. We have not closed 2022. However, I'm told that the expenditures did go up, so that deficit will probably increase. A healthy unassigned fund balance would probably be 10% for your general fund, at least 10% of the revenues or expenditures, which would be around a positive $350,000. So I don't, again, have the actual numbers, but Sally has informed me that the number will grow, and it'll, take some time to get to that positive number. But we've seen this with other cities before as well, and it just takes some time to get there. So from there, I'm going to just jump to our auditor's report, which is on page 5. I'm just going to mention the first paragraph, and then I'm going to jump to the bottom 2 paragraphs. The first paragraph just states we were engaged to perform an audit of these financial statements, which we talked about at the very beginning. Our job is to form an opinion on the financial statements. However, on the second to last paragraph, basis for a disclaimer of opinion. So a disclaimer of opinion is essentially saying that we cannot issue an opinion, and I will talk about that in this paragraph here. Because of the potential for irregularities and inadequacy of accounting records, which essentially is those findings that we talked about, limited information on subsequent events, we have a tentative financial statement for the future. However, part of our audit procedures is we have to look up into the date of our report, August 15, 2023. So part of our audit procedures is we have to look forward almost 2 years to assess the position and health of the city. At this time, we don't feel like we can, and that's part of the limited information about subsequent events. The second one, or the next one, the lack of management representations. So we will talk about this a little more in depth here. At the end of our audit, we ask management to sign what's called a management representation letter. This is not unique to this audit. We're not doing this just because of the situation of the audit. This is standard for every audit that we perform, that I've ever been a part of. This language, the language that we have in this letter is not just because the allegations or things that were going on within the city. I'm going to read a couple of the bullet points because management has elected not to sign the letter, but I'm going to kind of hit some of the bullet points just to emphasize possibly why. The financial statements referred to above present fairly in all material respects, or in conformity with U.S. GAAP. We acknowledge our responsibility for the design, implementation, and maintenance of internal control that are free from material misstatement, whether due to fraud or error. We acknowledge our responsibility for design, implementation of internal control to prevent and detect fraud. We have no knowledge of any fraud or suspected fraud that affects the city and involves management, employees, or others where the fraud could have a material effect on the financial statements. We have no knowledge of allegations of fraud or suspected fraud. We have no knowledge of instances of noncompliance, suspected noncompliance. We are not aware of pending litigation. We have taken timely, appropriate steps to remedy fraud or noncompliance, and we have a process to track audit findings. There's 44 of these bullet points, and they're essentially asking management to represent that they believe that these financial statements are presented fairly as well, and there's no issues of fraud or error. So, this comes from, if management can't sign a representation letter, this comes straight from our interpretation of our auditing standards. If management refuses to provide a letter, or if the auditor has concluded that sufficient doubt exists in management integrity such that representations are not reliable, the auditor should disclaim an opinion. So, at this point, we are unable to, according to our auditing standards, because we didn't receive a representation letter. So we do have a financial statement, and we still have those reportable findings. However, we are unable to issue an opinion today. And that states at the bottom paragraph, because of the significance of the matter described in the basis for disclaimer of opinion, we have not been able to obtain sufficient and appropriate evidence for a basis of our audit opinion. So,
So did you present an opinion?
we can't.
If we signed a letter, would you have presented an opinion?
So, that is something that, we actually had multiple CPAs in a meeting kind of discussing if we were or not. So, at this time.
You don't know?
Yeah.
Okay.
So,
And my biggest deal, and I know, I'm not saying it's your fault,
Right.
my fault, whose ever fault it is, we're sitting here 3 years past,
no, for sure.
which is crazy, and I mean, we need to, what are we correct in the future, so that we're auditing, and we know that when the audit should occur, it's gonna be there, and we've got it, and we've got everything, we make corrections or do whatever we need to do at that point in time, because you're saying, and it's true, there's a whole lot of, people that were involved or moved on or gone or whatever, and it's hard to find all the documentation and everything. We need to get up to date, and I don't know how we do that, but
I think,
because we still got one more to go before we get up to date.
and Sally and I just had this discussion, and we can talk after this meeting more in details, and after the council talks and management, but,
Well, I'm not talking, this is bad, we just want to know bad news, good news.
Right.
Whatever it is, we're quicker.
Right, so, and I've been in contact with Crawford and the consultants who close the financial statements. They are anticipating it to be done within a couple weeks,
Okay.
the June 30, 22.
So we could potentially get that.
And so, Sally and I talked about this. If there's an uncomfortable, well, let's put it this way: if we're unable to sign this letter, then our audit procedures will be very limited, because we know from the outset that we're going to disclaim, and then we would move on to June 30, 2023. From there, it looks like, so I'm told, we've established controls June 30, 22. It seems, and based on our interviews, the expenses have gone down significantly. We can get comfortable with these June 30, 2022, the beginning balances. and move forward to June 30, 2023.
So
And
you'd
make this-
present us another document like this for the 22, basically?
Essentially, yeah.
Okay.
And then June 30, 2023, you're looking at having an opinion on your financial statement closed out in a timely manner.
So we'd get the next audit of this year in a timely fashion if we did it. I know we've been, I'm not saying you guys are at fault, that's not,
No,
I just
no,
want
I-
to get, you understand what I'm
Yeah.
saying?
No, we're all working towards it, and so a normal, and I don't want to speak for the consultants, again, they're very busy themselves. You know, it's an average that they finish around, 4 to 8 months, so I don't know their schedule. So I'm not going to box them in or anything, but let's just say they finish within, November, December of this year. We can usually turn once around 8 to 12 weeks after that. If we're, and that's, you guys are on.
That's kind of our goal, I mean, my goal at least, I want to get.
I mean, 6 to 8 months, would be reasonable to say. Now you guys are on what's called a full accrual financial statements. And that comes with booking full GAAP financial statements. And I know that's, it's gonna be hard to, I guess, explain this, but you are booking essentially everything you're required to book in generally accepted accounting principles. And that is bringing on the pensions that the state has. You have to bring those onto your books. Crawford and Associates then has to wait on the state to provide information. So that's sometimes the hang up on their information. They have to wait for them to then book it into your financial statements. Some cities aren't on the full accrual or full GAAP financial statements. They're on what's called modified cash. They don't book the state information. They don't book some of the accruals that you're required to book, and so those go a lot quicker than the full GAAP financial statements. Now, that's going to be part of the hang up, is that you guys are recording, that information. So, yeah.
All right, thank you.
Yeah. I think that's it for the presentation I have. I'm, happy to take more questions or discuss any of the findings if we need to go into those in any more detail.
What is the advantage to that you were just talking about, the full gap versus non and everything, and what constitutes that? Is that in a charter or?
So, the argument I've heard is the bond rating. If your modified cash, will your bond rating go down? That's yet to be determined or seen, but that would be one of the disadvantages. Other than that, it's just to usually the preference of the city, whether they want to have a full accrual financial statement. So, thank you. Yep.
Anybody have any other questions or? Good news, bad news, and if it's us, hold it, and I know everybody blames somebody else, but we just need to get it sooner so we can make those corrections and not repeat our mistakes. And that, it's probably on, a multitude of people. I'm not trying to place blame on any one individual or anything. I just want to get more up to date. And if we're doing something or not doing something, we want to do that, I think.
Yeah.
It's just easier for us, I know.
Oh, I mean, 100%. Timely, if you don't receive timely information, it's almost useless. So, this is, I will say this is a unique situation. This is not the norm, especially with, I don't know the details, but, you know, with the consultants that you have, again, they're, you know, they do jobs all over the nation and they're very qualified and they get stuff done timely. You can see by the findings that there's a lot to correct.
Sure.
So, and then that just delays what we do, obviously. So,
Anybody have any other questions?
Yeah.
Yeah. At this point, I mean, we've pretty much corrected everything, so we're comfortable where we're standing right now, but we gotta get through this, so.
And I'd like to make a comment that I think if we actually work collectively together and hold more meetings, because the shape we're in right now, I think it'd help us out to get these things corrected. If we can sit down and actually discuss it. And that's all I got to say.
I think we've had a couple of different people running the ship that's got it going the right direction, and so we're going to try to continue that. It's, I think well-meaning people sometimes, if you hire me to direct an orchestra, you're going to be in bad shape.
yeah, controls solve a lot of problems, and I think we've instituted those, and you know, going forward, July 22, I think it's going to be a different situation. So,
Do we need to make a motion to approve this or accept it or anything? Or we just I know it's presented. Do we?
it's just presented.
Okay.
Yeah.
Okay. Nobody has any questions, then I guess. Oh, I'm sorry.
No, I was just going to mention that Sally can get you if you have any questions, Sally can get you my contact information. I'd be happy to have a follow-up phone call or anything if any questions pop in your head this evening or anything like that. So I'll be happy to do that. So just let her know.
Thank you, Gary.
Thank you.
Thank you.
Appreciate it.
Entertain a motion to adjourn, I guess, unless you have something else you need to tell us. Or
You know, hopefully we'll be seeing you here in a month or two.
I hope so.
Knock it out of the park, so.
Yeah. If we're holding up something, you know, from our end to get the next one done, we want to get it done as quick as possible. So just let us know if possible. Any motion to adjourn?
Make a motion to adjourn.
Second. Motion been made. Second. Roll call, please.
Inman,
Yes.
Miller,
Yes.
Rowe,
Yes.
Barker,
Yes.
Lau.
Yes.
Thank you.